All right, today we are going to go over Bio V1, which is right around the corner. It has been in development for quite a few months now. This is the first major protocol upgrade to Bio V1. It is becoming more permissionless, more autonomous, and generally more awesome. And so with us today on the line, we have Clemens, the Chief Product Officer and co-founder of BioProtocol, and Jean-Luc from Vending Machine, who has played a very critical role in helping design the protocol and getting it to where it is today. So, gentlemen, great to have you guys on the line. Maybe let's just start with some quick intros from you guys. Just a quick thing on your background to hear from you.
Sure, I'm happy to start. Thanks, Nate, for the intro. I'm glad to be here. So yeah, I've been working in the DeSci space actually for, I think, now it should be around 3-4 years. When Molecule got started with the IP NFT, I got lucky to work together with then Paul and the BioDAO team to formalize the first concept of an IP NFT, which was then basically the first time that anybody in that sense had transitioned IP on chain with a tokenization framework. And since then, been lurking around, working on different projects. And as the bio was fueling up within Molecule, I came on to lead all the product management efforts and tech efforts. And it's been an amazing experience over the last, now a bit more than a year. And I'm looking forward to what we got to show you now, what we're working on for the future. Much more to come.
Jean-Luc.
Sweet. And yeah, hey guys, I'm Jean-Luc, the co-founder of Vending Machine. We've been working with early stage crypto projects for about 5 years now, previously through venture, and then we've been doing token system design and economic design dedicated for about 2 years now. But yeah, way back when we started working with a lot of DAOs very early on and realized that that system design in crypto is such a blue ocean, just because everything is programmable. So it was something that really interested us, and we noticed that founders needed help. So we built a firm around that and have been operating for about 2 years now, designed the economic systems of more than 10 big protocols. So yeah, and we've been working with Bio for about over 6 months now, and yeah, really keen to dive into some of the mechanisms we've been going through in terms of bringing this fundraising process to light and to make it a little bit more clear. So yeah, keen for today.
Awesome. So in terms of an agenda today, let's start with kind of timelines and what's coming up next from sort of a user's perspective. Then let's dive into kind of the mechanics of the system, the different phases and how they work. Then let's go into protocol value capture, some of the brainstorming that's been going on there. And then also we can open up to community questions at the end. So let's dive right in. Clemens, let's start with you. Kind of just walk us through what this sort of first phase of the deployment will look like of Bio V1. What's coming up for users? What are sort of rough timelines that we can look at? And how should users sort of prepare themselves for what's coming next?
Sure, happy to start with that. And I think it's best to actually start a little bit with a look in the past, how launches of DAOs have been done in the past through Bio. And yeah, if you look at the past, I think almost now 10 DAO launches or so, most of them happened through like a closed curated process that was happening inside of Bio, where we were picking or working together with certain founders to help them basically build out their idea and research pipeline, and then launch through Bio with a fundraising mechanism. And we noticed that this worked well for a certain size. But now what we planned with a Bio V1 launchpad, which is one of the different verticals of our V1, we try to actually scale that and bring in the community to support these efforts. And so what you really have in the V1 launchpad is that now the community can curate DAOs. And then from these curation arise these DAOs that the community finds worthy of funding. And once they are funded, they exit into the free market. Those are kind of the three stages how you can think of it. And the first stage of that, the curation, is what we're launching next week. It will allow the first batch of DAOs. This one's still one that we work closely with to basically get to a certain stage. To be curated and now will be presented to the community, and the community can basically get with that early access to these DAOs through the curation process, because also the curation process rewards users with vesting DAO tokens at a preferential rate. And the DAOs will be the first time being able to actually collect assets through this process just before they will then do their proper fundraise through the platform as well. And so what users can expect next week for 3 DAOs to launch actually on 2 different chains. We decided to go multi-chain from the get-go. So that means that the DAOs could decide on what chain they want to launch. And we have 2 DAOs that will be launching on Solana, while 1 DAO will be launching on Base. And so meaning if you want to curate these DAOs and you're interested in supporting one of these or even multiple of these endeavors, you will need to have your bio tokens on the respective chain, because the DAOs will be launching on one chain, and then if they're successful through that, they might at a later stage when they're on open market become multi-chain, but at the start focus just on one, and that will be for 2 of them Solana and for 1 of them Base. So if you are like thinking and looking into the DAOs that we already have on our launchpad, on our website, and you're like, oh, okay, I like what one of them is doing, you can already bridge your bio right now and be ready for the curation step that would be starting early next week.
Very cool. And so just to sort of zoom out and set the stage here, V1 is a protocol that consists, I'd say first and foremost, on what we'll be diving into today as a sort of launch pad for these tokenized research networks, which we call BioDAOs, to really get them funded and get them scaled. Once they're sort of launched, the next component kicks in, which is a sort of automated liquidity and rewards engine. So that provides on-chain liquidity to these BioDAOs and also provides milestone-based rewards once they hit scientific milestones within these biotech ventures. And then this third component that we're starting to unveil are bio agents, which are sort of AI-powered scientific agents that automate scientific tasks like literature review, experiment design, experiment submission, and really bring down the cost of biotech development for a lot of these BioDAOs and start to solve some of these issues with BioDAOs and connect across BioDAOs too. But today we're going to focus specifically on the first phase of this, which is the launchpad, the BioDAO launchpad, and what users can expect, how they can participate, and how these designs came to fruition. So with that, Clemens, and also Jean-Luc, feel free to chime in throughout this because I know you played such a big role in it. If you want to start to kind of talk through sort of the objectives of the launchpad, how curation will really work and funding will work on a fundamental level, feel free to sort of walk us through that.
Sure. And I just want to actually relate something to the last point you said, and then I jump into the launchpad. I think it really helps for to think of it as like a life cycle of a DAO. And what the launchpad that when we will be looking at now at the start is kind of the start of the life cycle where they get their initial funding, and then they go off and actually do research. But a DAO then has only started, and it's basically still years in the making of doing research, of developing IP, developing products. And so what these other stages are really focusing on, the other parts of the protocol, are support these DAOs and obviously being liquid in a market, but then also supporting them be an efficient organization. Because if you think at the pitfalls of traditional research and what we're trying to target with DeSci is obviously it's funding. That's kind of the first stage, but also the other areas with basically making research more efficient, more cost effective, and more targeted towards user needs is what comes right after that. And for those, the bio agents and the bioact rewards, basically rewarding certain research outcomes, and then also having certain resources such as artificial intelligence agents to support these endeavors will actually drive these DAOs to become effective units of research that will spew out new IP, and then in the future also new products. All right. So with that kind of as an outline, let's jump into the Launchpad specific, the first stage, and that's what we are like actively launching next week. And yeah, maybe before we actually jump into the full design, I would love to quickly go over some of these objectives that the new Launchpad has. And JL, I know you spend so much time thinking about all these objectives. Maybe you can give us a rundown of what do you think the Launchpad came down to, what are the most important objectives in your opinion? And this is just obviously here an inspiration.
For sure. Yeah, happy to. Yeah, so I think like when we were approaching this design task, in conjunction with Clemens and the team, the most important thing for us, well, there was a couple of things. Obviously, it was tying in the needs of the core users of this product. And the core users of this product are kind of two key stakeholders we had in mind. One was obviously the BioDAOs, like people performing research that are coming to the platform in order to raise capital and kickstart a community. And the second stakeholder is obviously the users, the people that want to actually get involved in funding science that traditionally wouldn't have a pathway to do this. So in order to do that, we needed to make sure that we both had enough demand, both for BioDAOs coming through as well as users to participate. We also had a mechanism for curation, because the great thing about permissionless markets is that you get a lot more data, you get a lot more quicker iteration, but it also means that you need some sort of verification mechanism to kind of stem the flow of just relentless, random DAOs. And then we also wanted to make it user-friendly. So I think those are probably the most important, from my opinion. I know there's a couple more on here, like prepping the DAOs for future fundraising, making sure the team's aligned. But yeah, in my opinion, it was catering to those key stakeholders and making sure there was demand for them to interact properly, I guess.
Yeah, thanks. 100%. And I think the struggle here is with the system that you're building for different types of stakeholders is that you will at the end always need to make trade-offs and figure out kind of an equilibrium that works for several stakeholders. For example, if we would like purely optimize for, let's say, the community, then they would obviously always be favoring getting in early at the lowest valuation, but that might impair fundraising possibilities for the DAO in the future. So we always need to kind of find a trade-off between these different objectives. Okay, now at the end, these objectives really there would probably be an infinite amount of solutions that could fulfill these objectives. We came down to a handful where we felt the trade-offs are well calibrated. And so we came with the 3-step process that I already outlined at the start, where we have a curation stage, then the fundraise mechanism, and then the liquidity event at the end. Now, we like to think about it as a modular system, because in the future we might need to change things around and continue improving the system as the market is interacting with it, as we're collecting data, and as users obviously also giving us feedback. And so you will see a lot of different parameters that are being mentioned now while we go through this. But think of these parameters basically as like an initial calibration of the system. And we have these parameters as our poles and levers to actually change the system around in the future and adjust it to something that might fit if the market is moving in different direction, if user preference are moving in different directions. All right, so again, just highlighting the curation step here at the start will allow users to use their bio to commit it to the DAOs that they find most attractive. And that will give them a preferential rate to the next fundraise that they will be doing, at the basically risk trade-off of that this fundraise never being a success. So they're locking up their bio for a certain time period, which will at the start be 2 months. And this bio, once the fundraise is successful, will be actually given to the DAO. and the user will get DAO tokens vesting at a preferential rate. And depending on how successful the fundraise will be, for example, if it's an auction, the rate will be even like more preferential than, for example, if it's just hitting the minimum raise that is target. But we'll get to that in a sec. Now, the raise itself will be in the base token on the chain. For example, on Solana, it will be on Sol. On EVM, it will be ETH. Which will be the capital that they will be using to fund their research. So think of any funds that are acquired through this. It will actually give the DAO the capital to focus on research and obviously also grow the community through this. And then once the fundraise is successful, we enter the market and we have the liquidity event where the bio that was captured at the start in the curation stage by the DAO through the support of the bio holders is now being utilized by the DAO. It will be an automatic process where that will feed into a liquidity pool that is pairing bio with their own token and basically therefore giving instant liquidity. Now, bio as a major shareholder and or stakeholder in these DAOs has an interest in deepening these liquidity pools as well. And so as the liquidity events are often also very volatile events, especially as we've seen in the past couple of weeks, bio is aiming to actually deepen these liquidity pools, especially at the start, and manage these positions actively so that the community can expect their sufficient liquidity to exist in these BioDAO bio pools. Okay. Having the rough overview, JL, Nate, would you like to add anything to it? Else I jump straight into the curation. Okay. All right.
I was just going to say, I was going to talk about the differences in the funding tracks, but I think we can probably get to that once you get to the fundraising mechanism.
Sure. All right. Jumping into the curation, which will be, again, that system part, the first part that we'll be launching next week. And so to recap again, the bio token holders will select the DAOs that they are most interested in. And this will be by basically pledging or committing their bio towards the DAO. And the amount of bio that they will need to basically reach at a certain threshold will be around 150 to 300K in US dollars in bio, which at current prices will probably be around 1.5 to 3 million in bio. And this is the range, and the range is basically determined by how ambitious is their fundraising need. So the fundraisers that we will see for the first 3 DAOs they're aiming to do auctions, and they set their own min and max values for these auctions, which we often discuss with them to find reasonable ranges. And so these curation thresholds, if they have extremely ambitious fundraise goals, then these curation thresholds need to be higher, A, for having more liquidity on the market afterwards, but B, also because it's just a more risky raise. And so the community needs to be more committed for these raises. Now, the fundraise, upon its completion of the fundraise, as I said, these tokens will be used then in the liquidity pools. And if the fundraise is not successful, basically everybody is getting back their ETH or SOL that they've committed in the fundraise. And the users that have committed as curators their bio, in the case of an auction, they will still be locked up for a little bit, as basically the opportunity cost for having selected a DAO that unfortunately didn't manage to raise enough sufficient funds to close their fundraise, and as an opportunity cost to basically using their bio in other DAOs that are now potentially curating. All right, quick overview on that. Again, JL, Nate, would you like to chime in on anything of any component here?
I want to double click on this point about lockups, because I know anyone who's locking up their token, well, I mean, it's good for the protocol because it takes supply out of the markets, but people, locking tokens and having lockups can be problematic for some users. And so can you help me understand, like, what, you mentioned it before that by locking up your bio in curation, it qualifies you potentially for a pretty significant discount on the BioDAO tokens if the funding is successful. I guess maybe we can dive into that deeper in the funding round, because it might become clearer. But just to sort of like hone in on that point, that people are taking this opportunity cost of having their bio locked up. Obviously, they can't do anything else with it while it's in curation, in exchange for what could be a very sizable discount on the tokens if the BioDAOs successfully goes through funding. Is that sort of roughly accurate?
Sure. And yeah, I think JL, you designed the system or had a deep influence on it. Would you like to share a little bit on the design thinking there?
Sure. Yeah. So as we kind of said before, we're trying to balance a couple of different objectives here. The main reason why curation is in bio is actually for a primary reason of making sure that these DAOs have guaranteed liquidity for when they launch. The secondary reason is actually to give utility to the bio token. So even though the lockup does sound like a bit of a, I guess, like no one loves to hear lockup, I understand that. But I'd like to see it as like a lower risk seed investment, because essentially what you're doing is you're able to invest at the most favorable terms, and it's conditional. Like the execution of that investment is conditional on the fundraise being successful. So that lockup is kind of like your escrow period, and then if the fundraise happens to not be successful, you actually get fully refunded. So you've removed some risk in a traditional like seed round investment, I would say. But yeah, I guess the trade-off for that lockup is you are getting access to this new investment opportunity at the best terms. So before anyone else. Yeah.
What's also cool is like, especially in crypto, a lot of those types of like lockup or discount deals happen, in the VC world behind closed doors. And what's kind of cool is this brings everything on chain. I don't know. Has another token launchpad done something like that before? I don't know. I'd be keen to know if they have, or if there is some inspiration. And by the way, another thing just before we move on that would be great for you guys to touch on is the whitelist and how that would work out, because I know that's been sort of proposed recently.
Yeah. So just recently, in like the last couple of weeks, there have been one or two launch pads which have released a similar mechanism. I'm talking about DAOs.fun here, but yeah, we actually didn't take inspiration directly from them. This was something that was in development before then. And they do have some slight differences. So we haven't seen an exact iteration of this on market yet. So it will be interesting to see, marketizing that very first funding round, because the DAOs that are coming through this system haven't had backdoor private fundraising yet. So it will be very interesting to kind of open up this, early community building, not just to a curated set of VCs, but including also anyone with a crypto wallet who's participating in the bio ecosystem. So yeah, should be interesting.
Yeah, and just chiming in on two of the dimensions here. One of them being basically the discount for the curators. Depending on how successful the fundraise will be, the discount can be between somewhere around 10% to actually having almost like a 80% discount on the follow-on fundraise. So almost like a 5x, depending on which fundraise mechanism they use, and basically on what valuation the fundraise mechanism will be settling on at the end. And secondly, the whitelist. So we spoke to many founders and DAO leads that basically have already community members that are contributing so much to the community through doing research, through community building, that they felt like they wanted a mechanism where they can actually have some people guarantee a slot in this initial curation phase. And so we basically created a system where there is a certain allocation within the curation that is going to whitelist, and anything that doesn't get filled goes to the public. And this is currently set to 50% of the total curation allocation. So if there's, for example, the 300K in bio that needs to be allocated for curation, the first 150K there's a phase of a couple of days that will be where only whitelisted users can curate and add to that. And also that is actually having a cap on it per user. And then anything that doesn't get filled there will be opening up and be in addition to the remaining 150K that will be open for any public user. And this whitelist will also be there will additionally be wallets from bio users that are bio whales, so people that have been supporting the project for a while and hold significant stake in bio. They will also get a chance to curate with a certain amount, again, in the range of that cap per wallet per user in this whitelist. All right.
So we've just had two community questions come in that I just want to bring up from VBK. The first one just relates to your last point. Like, what would be the criterion for the criteria for the whitelist? And I think Clemens, mentioned that, which is these are typically community members that are affiliated with the BioDAO, or the bio holders that are holding X amount of bio. So I think we said potentially like, what was it? 1 million bio can qualify for a whitelist. Is that roughly accurate? Do you want to expand on the criteria, Clemens or Jean-Luc?
Sure, happy to do so. So I think one important thing to keep in mind here is to basically always, again, have a trade-off and basically find the balance between allowing people that have basically contributed to these systems immensely to basically get some preferential access to this, or actually be included in it, which could be easily, if there, for example, would be bots chiming in and so on, might have a hard time actually coming in. And then actually allowing anyone to participate in these systems from the get-go. And so, again, this is the reason why we implemented this whitelist currently to be around 50% of the total curation as a max for these DAOs. And the community members within the DAOs that have supported these DAOs already for a while, that might be, again, researchers that have contributed to it, team members, community members, they will basically, the DAOs will basically select these and will let us know about the ones that they want to include in their whitelist. And then within the biosphere, basically we allow anyone right now, again, a parameter that we have set where we are open to also get feedback on it, anyone with more than 1 million in bio to also get a slot on that whitelist. One thing to keep in mind, the whitelist does not guarantee you a bio allocation, but it gives you preferential access. So not everyone on the whitelist will immediately have that amount accessible, or like will have that basically saved for them. But it allows them to basically in this first phase contribute if they're interested. Yeah.
And then there's one more question from VBK. The curation says it does not give access to liquidity or funds for the BioDAOs before an auction. Correct? As in the traditional VC world, the seed round gives this liquidity at that time. So that's correct, VBK, that the funds would not unlock for the BioDAO until the auction or the bonding curve is successful or exceeds its preset threshold, at which point the funds raised in the curve of the auction will get released to the BioDAO, and the bio that was used to curate and also a portion of the set aside BioDAO tokens will then be automatically transferred to an on-chain liquidity pool. And so only at that stage, once the funding exceeds that threshold, do the funds become available. Anything to add to that?
Perfectly explained. I think one cannot even see the curation in the fundraise almost like one step, where the DAO, only if it is successful in this one step, curation and fundraise, gets the bio and the funds. And if one of these two steps fails, then like the funds will be returned and the bio will be returned with, again, this little downside of having the bio locked up, and therefore you get the bio back, but at a later state.
Cool.
Yeah, just to add there, we did want there to be some risk for bio holders. So, you know, it's not guaranteed that all of the auctions will succeed in fundraising, although we hope that they all do. And there is also a bit of a lockup, because we didn't want a situation where bio holders could continually just curate every single BioDAO and guarantee profit. So there is like a good chance you get the best entry possible, but we also wanted to make it a bit more balanced so that there isn't just like value leakage from bio holders which are looping the system. So yeah, just to add some clarity.
100%, because in the end, as we call the stage, curation is about actually selecting, and that means that there needs to be some risk related to it.
Real quick, what is the cap per wallet for the whitelist and for the rest of curation?
Yeah, so I actually, that's a good question. I need to double check our docs, where I think we have listed it out in our recent Commonwealth post, the exact number. But if I remember correctly, for the whitelist curation, because we have quite a lot of demand for that, it will be around, I think, 50K in bio, so around 5K USD. And for the public curation, that will probably be higher. I need to double check those numbers, but the public one will be higher to allow also people to have a to acquire a higher stake in it.
Cool. Let's keep going.
All right. Cool. Then just summarizing some of these. Summarizing again some of these parameters that we have mentioned. So the curation purchase valuation, so basically meaning like how much DAO token someone gets for their bio is DAO dependent. We gave that range. The creation threshold is around 150 to 300K. So assuming they give up 5%, you can calculate from that somewhat the valuation that the bio committers that are giving the curators that are giving their bio will be getting. The curator lock, basically meaning if the follow-on fundraise, which will happen afterwards, is not successful, would be 2 months. And then the vesting schedule for a successful DAO that now has actually raised. So meaning, for example, I as a curator now have given my bio, now I'm getting the DAO tokens, and these DAO tokens will be vesting over 6 months with a 3-month cliff. Basically, because I got this preferential rate to the initial raise, I now have this lockup time where I will be able to claim it through the bio platform. Okay. I think with that, we captured most of curation, and we can move on to the next step, which is the fundraise. And JL, you wanted to already get started on the fundraise. Would you like to introduce us to the two mechanisms and the trade-offs between them?
Sure thing, yeah. So there's going to be a choice for BioDAOs when they're coming through the bio launchpad. And they can decide one of two options: to either fundraise using a bonding curve or to fundraise using an auction. And yeah, there's a couple of trade-offs between each of those pathways and a couple of advantages as well. The auction is much more efficient at raising liquidity, but it's a much less engaging like token launch experience. You also are not able to do it as permissionlessly as the bonding curve, because in terms of the auction itself being a mechanism for curation, auctions are a little bit less transparent in that a user which is purchasing in an auction might not know the valuation that they actually get until the very end of the auction, just as a function of how that mechanism works. So the decision for BioDAOs comes down to if they already have a really strong community and are very confident in being able to raise a large amount, the auction is a good pathway in order to make sure the raise is efficient, keep the valuation in a I'd say like a reasonable ballpark, and to launch without the dependencies of instant liquidity. The bonding curve, on the other hand, is a really good mechanism for DAOs that kind of want to engage in the crypto community a little bit more, generate that hype, generate some speculation. The token trading is live straight away. So this bonding curve that we've used, it's bonding curves are used all across DeFi, from AMMs and Uniswap to other token launch pads themselves. So this will be a very familiar trading experience for people that have participated in those. And yeah, the downside is it does raise less capital for BioDAOs, but it is much more engaging and should actually give a larger holder base early on DAOs which are looking to generate that community. So we're recommending that to, I'd say, like earlier stage DAOs that maybe haven't developed a big group of followers yet and don't have that community. And yeah, the auction is kind of a more efficient fundraising pathway for DAOs that have that dedicated community.
Great summary, thanks. So that actually, puts it very nicely. If we just look at them individually, the bonding curve, I think, has this price discrimination where everyone that is buying in basically gets a different price depending on how early they are. And so any DAO that is basically starting out and wants to attract a community while it's still maybe very early stage, can therefore reward any early participant who is giving in their capital, who is supporting the endeavor. While the auction, basically, if you have a large community and you want all of them to get the same price from the get-go, you might not want this price discrimination, and so therefore you might choose a mechanism that guarantees the same price for everyone, which an auction would usually do. Now, the great thing about a bonding curve compared to an auction is auctions are usually time-bound in most mechanisms. So that means that you have some dependency on market movement. So if you think of like any tweet being fired off by the Trump administration or so, moving the market or something else, if you're lucky or if you're unlucky and that is happening in the time frame of your auction, the market might move and that might have a big significant impact on your fundraise. And that also counts in the exact opposite direction, right? If there's something negative happening. Now, a bonding curve is kind of unlimited until it closes. So people can trade it as long as they like, until basically the max valuation is reached and we are transitioning into the open market with an AMM. And that means that DAOs that are like not in a hurry, they want to like build right now and are looking for organically attracting community, that can be a very efficient mechanism because they're again, independent of what the world and what the markets and what direction they're moving. You also have a very natural exit to a market because people who have already been trading your token now can actually just continue trading it on the market, where in auctions you usually have a kind of big liquidity event. I think moving on through the auction as the alternative, and also to clarify here, the next 3 DAOs all have opted for now to go with an auction. So the ones that you will be curating next week as a user, if you're interested, all chose to fundraise with an auction type. 2 again will be doing that on Sol, the same chain that they will be curating on, and one of them on Base. Now, again, repeating what JL said, the capital efficiency for the DAO as basically raising funds is optimized with such a mechanism, and the price discrimination is removed. All right. I think with that, we can already step into the next stage, which is now the AMM stage.
Right. Can I just, Clemens, one last thing. Now that we've sort of established the mechanics of the bonding curve and the auction, can we sort of reiterate how that potential discount would work for bio curators? Maybe let's take it first with the auction and how it relates to the sort of minimum valuation.
Yeah, sure. So how currently these curation amounts and the valuation is set is it's roughly, for some of them, 10 to 20% discount of the min valuation or the min raise of the auction. So let's hypothetically assume a DAO wants to raise 500K for 15% of their tokens. That would be 3.3 million that they at valuation that they would like to raise. So you would probably then set the curation around 3 million valuation. And so in that case, with these 500K, you would get around a 10% discount on the min raise. Now, the min raise doesn't mean that's where the auction closes. It's just a starting point, right? So most DAOs that we have seen actually raise most of the time 2 to 3x from the min raise. And so what the curators then actually get is a lot larger discount to what the actual fundraise finalizes on. And so that can be very attractive, therefore, for anyone who is interested and who really believes in the project and is fine with the vesting lockup that is happening. Because again, as I said initially, that can be up to a depending on depending on how large the raise is, could be 2-3x of what the minimum valuation is.
I have a diagram that might help with this, if I'm able to present it quickly, but otherwise,
Sure.
if not, we can move on.
No, feel free.
Okay, let's see if I can do this. Okay, cool.
Looking for your screen to add it.
Should be there now.
So let me remove Clemens' screen. Give me one sec. Sorry, Clemens. Okay, cool.
Thanks. Yeah, sorry, just quickly to show this, it might help just being a bit visual. So this is kind of a very simplified diagram of how the auction works. So you can see we have a minimum threshold there on the left and a maximum threshold there on the right. And essentially the auction works by selling all of the tokens which are allocated to the auction. So that might be 15%, might be 20%, etc. And they're all being sold at a fixed price, and so until every single token is bought at that price. Once all the tokens are bought at that minimum price, that's when the price can start increasing with more capital deposited. So you reach that minimum threshold, and then after more capital is deposited from there, the valuation starts increasing, and it can stay within that range until the auction duration closes. Or if it hits the maximum early, it can close early. So you can see what we mean where if you use the deposits early on, they're depositing at a valuation which might be quite low, and then that can get pushed up by depositors later on. Now, curators that come in at that earlier stage we were talking about, they're going to be essentially swapping their bio tokens for the BioDAO tokens at around that minimum threshold. It could be at the threshold, it could be a slight discount to it or a slight premium, but roughly at that minimum threshold. So depending on how successful the raise is, you can see that they could potentially get quite a good entry, essentially.
Yeah, and just to highlight there one thing, because that sometimes leads to confusion in these auctions. Doesn't matter when one contributes to the auction, the final price that everyone contributes or basically buys the token on is defined at the end of the auction based on everybody's contributions. So that means if I contributed in the first day or on the last day, doesn't matter. The auction determines at the end, okay, this is the price that everyone who contributed is getting. That is different from the bonding curve, where an earlier contribution into the bonding curve, an earlier purchase of these tokens on the bonding curve yields you a different price than if you purchase it later. Okay, great. Great overview. Thanks, JL. Cool. And then maybe just to highlight this on the bonding curve mechanic there, again, we have set the parameter to be setting at the minimum of the bonding curve, and the bonding curve will be actually launching at a lower valuation, around 1 million, and closing at roughly 6.25 million. We can actually, I think, see this here, 6.25 million valuation. That means that also the curation amount is a lot lower, because you can think of the bonding curve itself already as a curation mechanism. Because if the bonding curve never closes and people trade along it and lose interest in it and just sell back into the bonding curve, then that means at the end that the DAO actually also not exits into the market. And so therefore, to allow more of these DAOs to start early on into the platform, and then have basically, while they're building the DAO, they can be traded. We plan to have around, I think it was 50K US dollars in bio. That would be 500K bio to be set as a threshold for the curators, which would then directly launch the bonding curve phase for any DAO selecting the bonding curve. Okay, all right, with that, let's finish the walkthrough with the last stage. We already highlighted some of the the parts here, the BioDAO biopools that are being spun up from the curator's bio and the BioDAO tokens from the DAO. And this position is held by the DAO, and now it's earning the DAO fees. So the DAO will actually, over time, with that, generate revenue. And as the bio treasury also holds some of those bio tokens, as shown in the tokenomics of these DAOs, bio will get a share for the services of these DAOs. Bio will now actually deposit its own bio and DAO tokens into these pools as well, deepening the liquidity and therefore making the trade efficiency, or increasing the trade efficiency and trading experience for users. Okay. I think we're good with the launchpad. Should we jump into the basically next step of our basically protocol vision and V1?
Let's do it. How is this protocol gonna make money? So yeah, I know you guys have been doing a lot of design work on this lately, and V1 will unlock a lot of these mechanisms coming up. So let's caveat this with this is fairly early stage alpha that requires governance to implement, but this is generally where we're thinking things could head in terms of value capture. So Jean-Luc, happy to have you sort of drive here, walk through how the protocol will make money and accrue fees along the way.
Sure thing. Yeah, so this is a task that we've been kind of focusing on maybe for just the past 2 weeks, actually. So it's still pretty recent. So we still have a long way to go. But I think what we're trying to do now is like the first goal of Bio has been to democratize access to research and funding for biosciences and all sciences. Break out of that traditional kind of funding pathway. And I think it's on track to be able to do that. But then I think a really important step, which has been somewhat difficult in the past due to legal and regulatory considerations, has been how do we drive the value that is generated from that investment back up the stack. So that's kind of where we're starting to look at and implement upgrades so that the Bio protocol can actually redistribute value both to its holders and to like the entire ecosystem. So this map here is just a general overview of the Bio ecosystem. So at the top here, we have the Bio protocol and the Bio treasury, and Bio token holders are users that own that treasury and that protocol's token. We then have the BioDAOs underneath in yellow, and those are what we're talking about today in terms of the launch pad. So how these new DAOs generate funding, build a team, and start their research essentially. And they will also have their own tokens. So those are governance tokens represented on the left there. Now, the furthest level down the stack is the IP, which is generated from all of this research, and the IPTs, which are the tokenized, the fungible tokenized version of the IP. And so that's kind of the baseline level of value in the ecosystem. So essentially you can think of IPTs as the revenue generating products that all of these research bodies above are kind of optimizing and building towards. So if research is successful and like a new IP is deemed acceptable to tokenize and actually implement on chain, the IPT will be launched. And currently that exists, but being able to distribute fees back to IPTs has been a little bit of a complex issue, obviously with securities law and trying to avoid some of those regulatory hurdles. So what we're doing is just trying to define the framework to enable that value flow back up the stack, not necessarily turning it on straight away, but making sure it's ready so that when the time comes, that vote can happen. So the very first step of that, which might sound very simple, is just implementing what could look like a fee switch into the IPTs. So essentially at the moment, they're governance tokens. And at some point in the future, we hope that the sponsor, the person that actually owns the IP, and the IPTs, so the governance token holders, will be able to vote to get that fee switch turned on. So that means that any revenue that comes from sales associated with the IP and acquisition of the IP, etc., that revenue can be redistributed to the people that hold the token, at least in some part. So that's going to be kind of the base value of where this ecosystem generates revenue and value for the people that invested. That will flow back up the stack. So when IPTs increase in value due to that value creation that they've made, the BioDAOs which hold a lot of these IPTs, and some of them are actually sponsors, their treasuries will also be growing. And so those BioDAO holders will now have governance control over like a larger treasury of assets. And then if you kind of follow that step again, the bio treasury is like the entire sector basket. So it will have assets from each of those BioDAOs, each of those IPTs, and it's kind of like the wide ecosystem exposure bet. Now, in terms of like that model, I think that's quite simple to understand. Like, we have IPTs, they will generate revenue at some point in the future. That revenue can flow back up the stack. But what we're now trying to do in addition to that is actually create a system where the bio tokens and the BioDAO tokens potentially have more utility within that ecosystem. So that's kind of something we're working on currently, and we're working through a couple of different design models that can potentially do that. Won't give away too much right now, but we'll have a post coming out a little bit later today, which should give some more details around that.
Thanks, Jaya. I would like to actually add just one thing to this graph, and that is people might ask, why do these IPT exist below the BioDAO, right? Why are you tokenizing the IP itself again when it is already held within the DAO? And that theoretically could be sufficient. And that's the reason for this is that the IPT tokenization, why that is important, is to allow transferability and manageability of that. That means, for example, several DAOs could be collaborating on a research project, and so now the ownership must be split between those. And you can do this by basically splitting the tokens. Additionally, if a research project, anybody who has ever looked into biopharmaceutical research knows that can take some time and might need several iterations of research. If one of these research assets in the initial stages is promising, it may need to raise additional funding with the data it has acquired. And so the DAO can then decide, for example, to sell further IP tokens specifically on this research asset to fund additional research for it. And that is then giving actually users access to that specific research asset under the management of the BioDAO, which is now growing in value by itself. And so having that flexibility to tokenize the IP, put it into its own object that can be shared, managed, governed, and transferred makes it a lot easier. And we don't like to call it like that, or we don't call it like that often, but the kind of real world asset space in the crypto sphere is growing rapidly. And one could really see this also as a real world asset, because IP is an underlying asset that is being tokenized and brought on chain. All right.
I just want to add that also, in addition, and correct me if I'm wrong, in addition to holding IPTs, IP tokens, BioDAO tokens in its treasury, the BioDAO, the Bio Treasury will generate launch pad fees, so fees from the bonding curve, right, not the auction, and also provide liquidity of its own to the on-chain liquidity pool, so generate trading fees from that. And then also, as bio agents, these AI scientific agents are rolled out and start completing scientific tasks within each BioDAO, and are even outsourced to external parties that want to use these agents. The protocol can generate revenue from bio agents as well. So actually, Clemens, if you want to, there was Masari Research did a report, I think it was 2 days ago or maybe yesterday, and there was a really cool part of that. If you want to just go to the next slide real quick, Clemens, if you can click that. So there's a specific sentence in there. I know it's small, but I just want to read it out loud. V1 diversifies bio protocols revenue. This is sort of at the end across 4 verticals: asset management, fundraising fees, liquidity provision, and agent services, shifting its valuation model from treasury-based to sum of parts, which changes bio protocol to become a self-sustaining system that scales with minimal overhead. So I'd say this is really the vision. I think what's so exciting about what's coming up in V1, not only does it make it more permissionless, more autonomous, but potentially more self-sustaining and sort of diversifying revenue across IPTs, BioDAO tokens, bioagents, trading fees, protocol and liquidity. So all of that. Cool.
Big shout out to the Masari team. They've been picking our brains on this mechanism for a while, and it's always great when somebody else is actually breaking something down so nicely that you've been working on and have sometimes a hard time to actually put it in simple terms. So yeah, big shout out.
Yeah, they nailed it. Go check out that research report. It's gated now. If you have a membership to Masari, we're trying to get it ungated by sponsoring it. So stand by for that too. But they have some high level comments and graphs in the tweet. So definitely check it out. All right. With that, I think we are tapped out on questions too. We're also crossing the hour mark as well. Anything else that Jean-Luc or Clemens that you guys want to add? I'll give my just last speech now too, which is that early next week, targeting Monday, we are expecting curation to launch with the first 3 BioDAOs being MycoDAO, SpineDAO, and ReflexDAO. Reflex on Base, Spine and Myco on Solana. So if you want to participate to curate these BioDAOs and get qualify for early allocations in them, if they're successful in curation and funding, then you'll need to bridge your bio, if it's not already on those respective chains, to those chains. We have a live bridge now where you can bridge from ETH L1 to Base or to Solana. And then on Monday, the front end will go live, the protocol will go live, and curation will begin. Once it fills up, the BioDAO proceeds to funding. And once funding exceeds its threshold, the token goes live on chain, sort of that sort of instant TGE that could be pretty exciting to watch. So that's what's coming down the line for us. Super excited. And then Clemens, Jean-Luc, any sort of last things you want to add here? And if not, we can wrap things.
Yeah, I would like to give a shout out to the DAOs that are launching next week through curation. I got the chance to meet all the founders, and they're extremely inspiring people. They really love what they do, and I'm looking forward to see the community, how they will perceive and receive these DAOs. All of them have a very unique value proposition. All of them have been really working over the last months insanely behind the in the back to make this launch a success. And we wish all 3 of them best of luck. We hope they get curated, and we hope that they will also go on to raise sufficient funds to further their research endeavors and create the future with that they envision.
Cool.
Yeah. And on my side, just the last thing I'd like to add is definitely stay tuned just for future developments. I think both on the Launchpad front and on the kind of like more high level value flow of the bio ecosystem, where we're going to be constantly developing and designing there. So there'll be more features rolling out over time. So yeah, definitely keen to engage the community in that discussion and make sure they're involved, and we move this forward together.
All right, to everyone that joined, Clemens, Jean-Luc, as always, thank you, gentlemen. We will see you guys out there, and we will see you early next week when curation kicks off. Thank you guys, and we'll talk soon.
Sounds good.
Take care.
Thanks, Nate.
Bye.